Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, September 8th, 2020, and we are again in the final hour of the trading day. I mention this each day, but I think it's worth repeating that, in my opinion, the best time to make your buying and selling decisions is at the end of the day and follow what the large financial institutions are doing near the end of the day. During the day, you have the algorithms, you have the day traders. They are the ones that are controlling the price. At the end of the day, the large financial institutions come in with size. They're dealing with the most money. They take control of the pricing away from the day traders and the algorithms. And I think there is definitely an edge in following what the large financial institutions do. So thank you all for coming today. Boy, it's been quite a day. I didn't sleep very well last night, and then I woke up this morning anticipating the market, and my clock was off, and I thought, what? And so I walked out, I looked at my phone. It was like 5:30, 2 hours before the market opens, and the reason my clock wasn't working is because the electricity wasn't working. And I looked outside, no one's electricity was working, and so I got out my lantern, my electric lantern, and I turned it on, used my hotspot on my phone, and my computer had some battery, and so that got me through. I called around to some friends and said, hey, do you have any electricity? They're like, no. And I was like, oh man, I'm not going to be able to do the podcast today. But then I did find a place, and I was just about to leave, and before I left, the electricity came back on. So we had a monster windstorm, huge windstorm. So anyway, I'm glad that it worked. I'm glad I didn't have to go over there, and I appreciate everybody coming today. Let's take a look. It's another one of those days, everybody. The Dow was down 611 points, down 2.16%. The NASDAQ down 420 points, down 3.72%. And the S&P is down 89 points, down 2.26%. So volatility is back with a vengeance in this last 3 or 4 days. Let's take a look. Dan is here. Hey, Dan, good to see you, my friend. Salutations right back. David is here. Hi, David. Hope you're doing well, my friend. Hope everything's going well with the shoulder. Johan, hey, buddy, what's going on? Johan is a current student of mine, and I think we had a really good lesson last night. And yeah, Johan's just a great student. I mean, he is learning everything to a degree that's unbelievable. So good to see you, my friend. Bob is here. Hello, traders. Hey, Bob. Kamal is here. Hey, Kamal. Good to see you, my friend. And thank you, as always, for everything that you do for this channel with your scan. Rami is here. Hello, Greg, in the group. Hello, Rami. Nice to see you. Miko is here. Good afternoon, Greg and all. Hello, Miko25. Good to see you, my friend. Steve Burns. Hey, bud. Good to see you. Always an honor and a privilege to have Steve with us. Steve says, futures were all over the place last night before this downsizing set in. Yeah, I remember last night. I think the futures were up like 280 points, if I remember correctly. And I thought, oh, man, it's going to be good for my overnight SPY trade, but not to be. Steve says, traders get into uptrends slowly, but get out of them fast. Boy, they sure do. They sure do. Steve said, it's always a happy moment when you get your power back. Yeah, talk about not appreciating it when you have it, right? Zach is here. Hey, Greg and friends. Hey, Zach, good to see you. Marcella is here. Hi, Marcella. Nice to see you. Hi, my friend. Hello back, my friend. I'm the worst student. Sorry. No, you're not. No, you're not at all. Steve says, a study on Tom Basil's website shows that up markets happen over 29.4% of the days, down markets about 9.5% of the days, and the rest, or 61.1% of the time, you spend going sideways. Yes, that is true. Hi, Yas. Good to see you. All right, well, listen, here is the plan for today. First of all, we are going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them moving forward. Did have a couple day trades that I will share with you as well. After that, we're going to go down through the watch list, see how everybody else is doing. There are some bright spots in a sea of red today, so at least that's positive. After that, we're going to talk about trader psychology. The most important skill you can learn in trading, and if some of you have issues with impulsive trading, then you know exactly what I mean. You know, we have to learn how to create a plan based upon good trading principles, but following that plan, that's a whole other chapter, right? That's where the real work begins. So I do like to touch on that. After that, I have gone down through the watch list and I have taken a look at the results of Kamal's scanner. I have three requirements whenever I'm looking to enter a trade. First requirement, look for a confluence or combination of signals. Number two, I have to have a good risk to reward ratio, at least 2 to 1 based upon valid support below me and valid and likely resistance above me. And then number three, I talk about this every day, but it's very important not to be too heavily correlated in any one industry. It's a good idea to have some diversification in your holdings. You don't want to just have all tech stocks. You don't want to have all just tobacco stocks. You want to be diversified. The market, generally, a lot of the stocks go up and down together, but not to the same degree. And then it's also a good idea to maybe get outside of equities, gold, bonds, silver, dollar, oil, things like that. So going to go down through the watch list, going to narrow them down. I'm going to look for at the end of the day for the very, very best signal with confluences of signals, best risk to rewards, confluences of signals on multiple time frames. And if I find something good at the end of the day, I will go ahead and buy it. After the market closes, if you have any questions for me, please let me know. Happy to answer them, happy to clarify. If there's any stock symbols you'd like me to take a look at, put them in the chat, put an emoji by them so that I know they're time sensitive, and we'll take a look and I'll give you my opinion. And then after the market closes today, if anybody has any new entries or exits or changes up on the board, that would be the time to do it after the market's closed, after I'm done trading and teaching. And so that's the plan. So I'm going to run the U.S. legal disclaimer and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right, Yas is here. Hey, Yas, good to see you, my friend. Appreciate you being here. Gary M, hello, Greg and group. Another wild ride. Boy, it sure is. Good to see you, Gary. All right, well, let's get going. First on deck is the all-famous overnight SPY trade. I do buy the SPY every day at the close. I hold it overnight, or in this case, I held it over a long weekend. I sold it first thing this morning. This is based upon a long-term back-tested study from Liz Ann Saunders at Bespoke Invest since 1993. They tested two different approaches. First approach, buy the SPY at the open, hold it through the day, sell at the close. If you did this every day since 1993, you'd have returned a negative 13.9%. However, if you do the opposite, which is what I do, buy the SPY at the close, hold it overnight, take the overnight risk, sell first thing the next morning, plus 634.2%. So big difference between plus 642 and minus 13.9. Past performance is no guarantee of future results. Blue line is buy the close, sell the next morning. Orange line's buy the morning, sell that same day's close. Huge difference over time. The blue line has just gone up and up and up and up, but there are significant drawdowns. So if you're considering using this approach, it's not all rainbows and butterflies and Skittles, I can tell you that. But since I've been using it, overall, it has been positive. So that's why I have this trade. So this wasn't the best. I bought this on Friday at 342.57. I sold this morning at 336.40. So that was a whooping overnight, but I'm still grateful that I did get out when I got out, because it is much further down than it is. I'll tell you, I never get this right. I mean, I get it right a lot, But when I think I know what's going to happen, like last night when the futures were way up, I said, oh, this is going to be a great overnight SPY trade. And I woke up and I was extremely disappointed. But that's how it goes. It just doesn't always work, but over time it has proven to be a profitable approach. So I will be buying this again today at the close. DGX, Yas and Kamal and I did buy DGX. Good setup. I like the setup. Under 30, over 30, V1, rejection of the 200, rejection of the third ATR channel. Can't ask more than that, really. And sideways motion here, which is good. But it is down today. It's only down 1.47%. I say only. But compared to the rest of the market, it's pretty good. I will be getting out of this today with a close under the 200-day moving average and taking a loss. All right, Apple. I did have a trade on Apple intraday. Back here. Johan and I did a lesson last night about double bottoms with bullish divergences, and here is a good example. Here's a low with some red MACD bars. We rallied and went green. We came back down. We tested that low, but the red on the second move down was much more shallow than over here. So at that point, I was looking for a trade. I was looking for an entry. This is where I took the entry with this higher low V1. I got in at 116.05, moved up nicely right away for me, got up to my 1.5 ATR trailing stop level, and then moved sideways, and then I had to get out on this bar when I closed below the previous day's low and lost the 50 RSI. But nonetheless, it was still profitable. 116.05 entry, 116.46 exit. And then Disney. Johan, if you remember correctly, we were talking about Disney last night, and intraday I saw it form this V2, and so I went hunting on the intraday for a long, and I bought the long here with this pullback to value V2. I bought an intrabar 135.69, moved up, got to my 1 ATR target level, so I instituted a trailing stop. I got out of half at 136.01, and then over here it had moved more than 1.5 ATRs from my entry, so that means if it gets back to my entry point, I just go for a scratch trade. So here it got back to my entry point. I sold the other half, but still a profitable trade because I bought here, sold half here, and then I was even on the rest. So I hope that makes sense. And Johan, as we discussed, as it moved back up here, it failed. You remember we were talking about that last night because of these bearish divergences and all that. When we got up back up there, it failed pretty strongly. All right. Frank is here. Hey, Frank, good to see you, my friend. Hope you're doing well. Congratulations. Frank picked the winner of the Kentucky Derby, he wrote to me. So not only a great stock picker, but obviously a horse picker as well. Steve says, my NKLA 520 crossover signal was very close on Friday, but didn't happen. Look at it today. Ooh, do I want to? NKLA, I imagine it's up. Oh my. Oh, man. Yeah, you know, that's the regret of following your rules. Sometimes you'll follow your rules, you won't get in something, and it will go on up. And then other times you'll break your rules, you'll get into something that you shouldn't have, and it will go down, and therefore you will regret that too. But, you know, trading is a marathon. It's not a sprint, and it's going to happen to you all the time where you don't take something and it goes up. You know, don't burn a lot of calories on it. Just go, just like Steve. He's just like, you know, I mean, sure, that's frustrating for sure because Steve was going to take it with the 520 crossover, but it never did. Well, it certainly did today. That's for sure, right, Steve? Frank said, "Oh, we have a poem. The trend is your friend. That's not hard to comprehend, but the right setup is something on which a trader depends, for that is what helps your stock to ascend. Very nice. Let me try that one more time. Oops, I didn't copy this correctly. All right, here we go. The trend is your friend. That's not hard to comprehend, but the right setup is something on which a trader depends, for that is what helps your stock to ascend. So true. Wait for a setup, be patient, let the trade come to you. It's all about patience. It really is about patience and letting the trade come to you. Steve, thank you for that, Frank. Steve says, oil chart today, down 7%. Is it really? Oh my. 5.75 here. Wow. Kamal says, Steve Burns, that would have been a killer trade. Steve Burns says, Kamal, that would have made my month with one trade. Yep, gosh darn it. Well, that's how it works. But look, Steve followed his plan. And kudos to Steve for doing that. It doesn't always work out, but you can at least, can be content in the fact that you followed your plan. You're a professional trader. You do what you are supposed to do. Right, Steve? All right, let's take a look now. Everybody else's trades. Oh, I have Q's here. I don't think anybody was in that. Walmart. All right, so Carol did buy Walmart here at 144.32. It's down $4.36, down 3%. Is coming back into the value zone. I would start to get interested in Walmart now that it's in the value zone, but I need it to stop going down and get some sideways motions. AGG, Carol bought AGG at 118.68, and then the next with the 520 crossover, which does backtest well, but the next day the 5 crossed under the 20, and well, it is up a little bit today, so I'm not sure if Carol is still in that, but Carol, if you're out there listening, let me know. Lilly, Gary is in Lilly. He bought it at 149.63 with this V1, false breakout to the downside. This has been all over the place. It went up big, then came back down, and then went up big on Friday. Earlier today it was up, now it's down. It looks like Gary's just about break even on the trade if I'm reading that right. Gold, I have Gary and Dan. I don't know if this is still correct, but had them in at 184.40 with the 520 crossover. The next day, then it went down. It closed below both the 5 and the 20. That's where I got out, and then I got out here with the rest when the 5 crossed below the 20. So that was a losing trade for me. Not a lot of winning trades in the last few days. But Dan and Gary, if you're still in that, let me know, or if there's any changes. Carol and Yas bought VIPs at 17.51. Nice setup. Bullish engulfing bar. V1, cross over the 200. It's under 30, over 30. Still holding the 30 RSI, still holding the 200. Down a little bit today, but considering what the market's down, not too bad at all. So I would be happy with that loss, honestly. Frank and Bob bought J&J back here. We had a dividend, so this is off a little bit, but I believe 147.39. Moved up beautifully, beautifully, beautifully. Thursday, Frank sold half, which I'm glad to see that because it is down about 0.81%. It looks like back to the entry point. Snap is actually green today. Karen bought Snap at 22.90. It is now 22.67. So it is underwater on the trade, but well off of its lows, and it is green, which is really good. BAC, Gary bought BAC at 26.05. Initially went down, then it got profitable, but down 3.88% today. WDC, Quad Racer bought WDC at 35.22. Had a nice move up, is down 3.75%, but still profitable on the trade. JDX, Yas bought JDX at 58.35. On Friday, it is now 57.62. So down 1.23% today and down on the trade. Okay, Goldman Sachs. Kamal bought Goldman Sachs back here on the 24th at 203.79. Moved up nicely. It was all over the place. Went up on Friday. Was looking pretty good earlier today. It rallied, but now we're at risk of losing that 200-day moving average. So I think that's Kamal's line in the sand right there. Stitch Fix. Wow, look at this. I have Gary in Stitch Fix at 22.56 with this V1, rejection of the 200-day. Took a while for this one to get started, but it moved, and today it was up huge. Well, it's up 2.29% today, but it was up much, much higher, probably around 6% if I'm looking at this right. So if there's any changes there, Gary, let me know. Evergreen, or Evergy. Quad bought Evergy at 52.90. It is now 52 even, so this one is down on the trade. FCFS, Bob bought FCFS at 58.10. Took off like a rocket ship, then came down, went sideways, head fake down, but it is up 0.82% today, so that's good. All right, TSN. Oh, I think everybody's out of TSN. Yeah. All right, let's take a look over here at Intel. Quad and Bob bought Intel at 49.22. Under 30, over 30, V2, rejection of the negative third ATR channel. We had some consolidation, sideways movement. Then we had a nice up move here, but looks like Quad and Bob are back to about break even on this trade. IAU, Frank bought IAU at 18.65, had a nice move up, but then like everything else in the last 4 days, just went down, so slightly underwater on the trade there. Alibaba, Gary's still doing well with Alibaba. He sold Alibaba September 18th puts, the 240, 235 spreads. So basically that means Gary will make the spread on the bullish credit spread that he sold, where he sold a put and then bought the put below it, sold the put at 240, bought the put at 235. And basically this is a bullish trade. He wants it to go up, which it did nicely. Looks like we have about 10 days before this expires, but he will still make all the money on this spread as long as it closes above 240. And right now it's 272.18. So that's looking pretty good. And then last but not least, Evan bought Constellation Brands here at 178.12. Had a beautiful move up. Today, though, it's rejected the 70 RSI. Lost the third ATR channel, which is a bit of a bearish, definitely a bit of a bearish pattern. All right, let's take a look. Brian's here. Hey, Brian. Hello, everyone. I got busy today and missed the Roku train. I would have bought at 160. Ah, shoot. That's how it goes, right? Sometimes. William Green. Hello, sir. Good to see you. Hello, Greg and all. Hope you are all doing well. I hope you're doing well. Also, William. Jeffrey Young. Jeff Young? Boy, you sound just like a guy I used to trade with 25 years ago. Jeff, oh my gosh. You know, I've mentioned in my 20s I was in the chewing gum business, and this man right here, Jeff Young, was my partner. We started that chewing gum business together. Wow, what a surprise, Jeff. Thanks for dropping in. You know, earlier I said my electricity was out, and I called Lonnie. I was going to go over to Kimber Cable, and I said, can I come over here and use your electricity and do my podcast? And they said, sure. But then before I went over there, wow, Jeff, good to see you. Hope you're doing well, my friend. Thank you so much for checking in. Wow, what a blast from the past. Awesome. Let's catch up soon, Jeff, for sure. Steve says Tesla down almost 20%. Jeffrey says, on S&P rejection news. Yes, that's right. People were expecting that Tesla would be included in the S&P 500, and people were buying that and front running that, and that's exactly right, Jeff. That is exactly right. All right, let me do a quick little checky check over here, see how things are going. All right, so listen, everybody. Before we start looking at potential end-of-day trades here, I just want to switch gears, get away from technicals and charts and support and resistance, and talk about the mind, talk about the most important part of trading, which is your the psychology of trading, keeping yourself level-headed, not getting too excited, not getting too depressed. You can do that by position sizing correctly, not taking too many trades in one day. Johan is a student of mine. We discussed this at length last night. There's a lot of good Facebook channels. There's a lot of good Twitter channels out there that do a great job of posting just great information. It's free, but it's worth its weight in gold. And one of my very favorites is Julian Komar at blog Julian Komar over on Twitter. If you have not subscribed to his channel, I would really suggest that you do, because it's a fantastic channel. Julian's a great trader and talks a lot about trading psychology. I believe he's from Germany. So do yourself a favor and subscribe to him at Julian Komar on Twitter. Let's see what Julian has to say. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading, by Victor Sperandio. And look, truer words have never been spoken. Johan and I discussed last night about the turtle traders and the whole story behind that. And if you don't know what that is, you'll have to check into it. They made the movie Trading Places about that. But essentially, the two principals of the firms, and these were very, very wealthy men. They hired. They had a debate. One of them said, "You can't learn trading; it's innate." The other one says, "No, anybody can learn it." So they went out. They took an ad in the Wall Street Journal, and they hired. I think it was like 12 or 15 just regular people, no experience in trading, carpenters, policemen, musicians, things like this. They taught them up. They made hundreds of millions of dollars for them. And the takeaway from this was the two principals said, man, we should have had these kind of lay people trade for us all these years. We would have made hundreds of millions of dollars more, because they didn't think they were so smart that they could figure out the market. And I'll tell you what, I would rather take somebody with an average IQ and teach them how to trade than take somebody who is really, really smart. The really, really smart people are the ones that have issues, because they think they're smarter than the market. They think they're smarter than the trading approach. And I get it, I get it. Like Jeff Young, who's there right now. Jeff is an extremely smart guy. I mean, one of the smartest guys I know. But I would bet you that if Jeff and I started to trade, his little computer mind would start kicking in and going, maybe we shouldn't take this trade because this, and this. And he would probably give really good examples of it. But again, we need to take the trades that we have, and we need to follow our approach that we've laid out in our original trading plan. So nothing against Jeff. Jeff's just so smart, and I could be totally wrong. Jeff is just so smart. I think he would second guess the market like a lot of smart people do, and that's when they get into trouble. So one more time, the key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. It's true. I would go out on a limb and say super smart people make less money than just your average guy and girl who doesn't try to figure out the market and just follows the trading plan. So keep that in mind. Keep it in mind. Everything is always about emotional discipline, okay? Zach says, keep waiting for an entry there, Steve. Also have money I would like to invest, not for swing, but for long-term holdings. All right. Hey, we're ahead of the curve today. That's good. It's not even halfway. Let me just do a little recap or check on things, see how everything's going. Not too bad. Just real quick, before I start looking at any new trades, all right, overnight SPY trade. As always, I will buy this today at the close, sell it, take the overnight risk, sell it first thing the next morning. The reason, in my opinion, that the overnight SPY trade works is that people at the end of the day, they've been taught not to take overnight risk. So there's supply coming into the market at the end of the day. Then the overnight comes. If nothing horrific happens overnight, people start bidding up the price again of the S&P or SPY the next morning before the market closes. That's where I feel like the real edge in this approach is. And we talked about this earlier, but You saw the difference between buying, just owning it through the day compared to buying it at the close and holding it overnight. We all know that the stock market's been up since 1993, but what those numbers really show you is that all the gains, think about it, all the gains in the S&P 500 since 1992 have come in the after-hour session. People bidding it up overnight and in the pre-market and selling into the market. So, this doesn't always work. I went through three months, or I guess 3 months. It was just straight down. Man, it was brutal. But, I made a huge comeback because I just keep following it. I did skip one day. Liz Ann Saunders is not going to date me anymore because I did, out of 2 years, not take it one day, but that's when everything was just so brutal and so scary. And I believe if I would have taken it, it would have been a profitable trade. So maybe she'll give me a second chance. I have no idea. All right. So S&P 500, I will buy that again at the close. DGX, I'm very grateful this is only down 1.31% today. I mean, extremely grateful, but I will be exiting this today with the close under the 200. As long as it's under the 200, I'm not going to hold it, right? It could just go all the way down. I don't care. But that's the key. Identify your support levels, get in as close as you can to them. If they get out quickly. If you're fortunate enough to have it ride it up, have the courage to hold it as it's going up. But what you always have to do is you have to quickly cut your losses. Remember, large wins, small wins, break even, and small losses. That's the formula for successful trading. That is really the formula for successful trading. But most people have small wins and they let their losses run, right? I'm sure some of you out there can identify with that, but that is true. So anyway, I feel very fortunate today that I only have these two positions. And, Johan and I were discussing last night, if you have 4 great positions, do you want to get in all of them on the same day? And, when I was taught this by Steve Burns, stagger in. If you go into 4 positions and they all go up nicely for you the next day, that's fantastic. But if you go into 4 positions and then the next day it pukes on you and goes down, that's the kind of thing that can destabilize you to a pretty strong degree. So just my preference, I don't do it all the time. I probably do it 95% of the time, is I usually just try to narrow it down to the best entry. Although last week I did take 2, but one turned out positive, one turned out negative, so it wasn't too bad. But Johan and I had a long discussion last night of, if you have great trades, do you take them? Do you take all of them? Well, one approach is, sure, you can take them all. Just reduce your position size on all of them so that when you buy all 4 of them in the aggregate, maybe it's the same as buying just 1 or buying 2. So hope that makes sense. Okay. So really all I'm watching here at the end of the day is DGX. If it, by a miracle, it closes back over the 200, I'll keep it. But that's my line in the sand. That 200-day moving average is the line in the sand. Okay. Wow, Stitch Fix is on fire for Gary. Nice, Gary. Beautiful, beautiful, beautiful. Johan says DBX and NVAX. All right, well, DBX is the one that we... Oh, no, it's not. Sorry. DBX. Yeah, we're closing back over the 200-day. It gives a good risk to reward ratio. The RSI is 42.98. It was a bit higher. But I think it would still give a decent risk to reward ratio. I don't know if anybody out there would have time to back test the under over on 200, maybe Kamal or Steve or somebody that has the ability to do it. I'd feel better if this back tested well, but in general, yes, this looks pretty good, but I feel better if we could back test this to see if there is actually an edge with buying the dip on Dropbox with the under over 200. Oh, we were talking about this last night. Here we go. We have a double bottom with the bullish divergence. We have a low with deep MACD bars. We have a rally. with green positive MACD bars. We come back down, we test a previous low, no red bars to be found. That's called a double bottom with a bullish divergence, and actually even better than just a regular double bottom with a bullish divergence. This is a missing right shoulder, and the trigger over the 200. That's not bad. That's not bad. As a matter of fact, I am going to put that on my list here because that's pretty good, I have to say. Let's put this on the list. That is pretty good. I don't know if it backtests well under over the 200, but in the context of the double bottom with the bullish divergence, it's pretty good, and it does offer a good risk to reward ratio. All right, let me quickly do the numbers on this because I do like that one. Good eye, Johan. Very good eye. Okay. Let me put this over here a little bit. Oh, NVAX. NVAX. Well, it looks like it was under 30, over 30, rejections in the negative third ATR channel, and rejection of the 200. Let's take a look at the weekly. Weekly's right in the value zone. Not bad. Not bad either. Not bad either. Gives a good risk to reward ratio if it closes under. Down 5.46% today, so that's a big mover. All right, I'll put that one on the board as well. Glenn, hey Glenn, good to see you. Hi Greg, cycle low on the S&P 500 is expected 9/11 September timeframe for a bounce into Fed next week on the 16th of September. Oh, that makes sense. Glenn's always really good with these kind of almanac, stock trader almanac kind of facts. Glenn says, looking for cues to bounce between 265 and 270. And what do we have right now for the cues? So you're maybe another 2 to 5 points lower. We haven't tested that 200-day moving or 50-day moving average. I would imagine that the market really wants to test it. Who knows? Steve says the DBX 200-day SMA trend filter has a negative back test as the stock has not trended well since the IPO. Thank you, Steve Burns. Appreciate that, my friend. Appreciate that, my friend. Thank you. So that's, that's good information to know. We just talked about DBX. All right, let's take a look at some potentials today. All right, here we have Zynex, symbol ZYXI. We have a sideways motion. We have a V2. We have a close over the 200-day moving average, which is good. We're at a 43.46 RSI. Let's take a look at the weekly. Weekly has formed a V2 and a rejection of the 50-week moving average with volume as well. So this one's definitely a potential. NBIX, I like this better earlier. It's come back down here. This is a double bottom with the bullish divergence. Again, we have a low, deep MACD bars. We rally into some green. We come back down. We make a lower low equal to or lower low than that. We have no red bars here, meaning that there is a double bottom with a bullish divergence missing right shoulder. Sold off. It was much, much higher earlier. I think for that reason, I'm just going to let that one go. I mean, the relative strength's not bad today with only down 0.05%, but it's well off of its high. And Johan, see the big bar that we have here from a Fibonacci standpoint? See how it rejected the halfway? We had a big bar down, larger than 1 ATR. We rally, we rejected that halfway. So I don't like that one as much. Beyond Meat, it's a nice V2, but I'm not able to take this one because the day one bar is much larger than 1 ATR. The risk to reward halfway to the washout bar would be down here. It rejected this thoroughly up here. You know, it is a V2. It's strong today. The relative strength today is doing well, but from a risk to reward standpoint, no. Kamal and I were discussing Virgin Atlantic earlier. Earlier in the day, it was a little chasey. It was much higher. I was thinking about taking this on the weekly because we have this on the weekly. We have a return to value. We have some sideways motion. Last week, we had a spike down, reversal back up. I think I'm going to take this on the weekly. It has formed a V2 right here. Here's bar 1, bar 2, washes out bar 1, bar 3. Currently is above bar 1's close. Bar 1's close is 1746. It's 1757. So I do like Virgin Galactic. I like, you could take this also on the daily with the close below the 200-day moving average, but I do like to diversify and have some of my trades be on different time frames. I've already worked out the amount of shares I'm going to buy here. It'll be fewer shares because I divide my maximum loss by the value of the 2 ATR, which is 710. The larger this number, the fewer amount of shares I'm going to have. But on the weekly bar, it's not chasey at all. Has a lot of movement up here. Could get back up to 2153. So far, I like SPCE on the weekly. All right, NBIX, that's the one we talked about. I just don't like that it got sold into and has this big day one bar that it rejected. I do like the double bottom with the bullish divergence, but this concerns me. This concerns me that it was sold off from this high. So I'm going to let that one go. DBX. As Steve mentioned, he did the back test on the DBX, does not back test well over the 200-day moving average. Good relative strength today, and you know, in addition, not just going off the 200-day moving average because that did not back test well, but the double bottom with the bullish divergence does look pretty good. On the weekly, we are holding the value zone, which is good. It is up today. Boy, you know, that's a tough one. That's a tough one. I think I still like SPCE better. NVCR, bullish engulfing bar, V1, risk to reward ratio doesn't make sense here. Currently the closing price is above the 1 ATR channel, so that's a little too high for me to get involved with. IWM, which is the Russell 2000, has rejected the 50-day moving average twice. That is positive, but really just not enough of a signal for me to buy anything here yet. Chart Industries, GTLS, rejection of the negative, well, not quite, but rejection of the 50-day moving average, but this is really a downtrend. I would rather look at buying something like this with a under 30, over 30. Market is very volatile right now, so CVS, under 30, over 30. Was a false breakout earlier. I think this went under 30. Let's take a look. That bounced right at the 30. Is down a little bit. Let's look at the weekly. Weekly is holding the negative 1 ATR channel. That makes sense. Why this would pop up on Kamal's scanner. Yeah, I think I'm going to pass on that one. STRA, another double bottom with a bullish divergence. We're at 1899 RSI, so that one disqualifies that. Pinterest, above the value zone, back into the value zone. 1 day of sideways motion. If I could get another day of sideways motion, then a V1, V2, I take it, but not now. PPLT, bullish engulfing bar. Looks like it could have possibly, it did reject the negative 1 ATR channel above it. I don't think it quite rejected the 50 RSI, but no, I don't like that. SINA, it's a V2, but it was above the value zone, came into the value zone, but it has not had any sideways motion days except for yesterday, and I need 2 of them. So that disqualifies that. Paycom, I can see why this was picked up on the scanner earlier. It was above the 200-day moving average, but now it's rejected the 200-day moving average above, which is not a good sign. KL, false breakout to the downside. Earlier there was a V2 going on, but now it is untriggered. WSM, V2, but I don't like the 50-day moving average right above it, -1 ATR channel above it, and it didn't really quite get low enough for a valid deep dip buy. ProShares Gold, UGL, which is double leveraged gold. This, I like this one better because we have a false breakout from the low range over here. We also rejected the -1 ATR channel and the 50-day moving average. I could possibly be interested in that one. Gold, okay, gold's the same as UGL, it's just that it's not double leveraged. Let's see, did this reject the 50 RSI? If it already rejected the 50 RSI, it wouldn't take the trade. Yeah, it did. It rejected the 50 RSI already. So nice false breakout to the downside. Earlier it was a V1, but this would have to close above 50 in order for me to get interested. So let me put this over here. And let's see, do I have anything else? No, just NVAX. I think that's the one I looked at earlier. Yeah. Okay, so candidates today, ZYZX, under 200, over 200. MACD is positive. It is closing near the high of the range. It's up 8.28% today and has a nice V2 on the weekly. That one's not bad. Honestly, that one's not bad either. Space, ooh, it looks like it may untrigger. The trigger is 1746 at 1744, so if that's the case, I will not take that. UGL, NBIX, I don't like that it was sold off at the top there. DBX, looks like it might lose the 200-day moving average. And GLD, which already rejected the 50 RSI. Let me take a look real quick at some things over here. Okay. Johan, thought about bringing up SPCE2, but felt a bit too high for entry with view of the rejection of the 250 and the 30 RSI on previous trading day. Yeah, so the way that I'm looking at those, I'm looking at on a weekly time frame instead of the daily time frame. And on the weekly time frame, there's a lot more movement possible to the upside and a very well-defined stop loss here with a close below halfway of last week's bar. But this week the close was 1746, we're at 1743. So if it does close below 17, if it closes above 1746, I will buy this on the weekly. If it closes under, I will not take the trade. And then on the daily here, ZY and X, it's a little chasey. On the weekly, we have that 200-day moving, or the -1 ATR channel on the weekly above it. We're at a 46.67 RSI. This is a tough one. I mean, it's up 8.62% today. There is a ton of volume. Let's see, what's the market doing here? Down 532 points. Nasdaq's down 432. It's up. I just feel like this is going to be a really volatile stock. I think what I'm going to do, I think what I'm going to do is I'm going to wait and see if I can get a better risk to reward ratio. It's a little chasey from the 200. We're at a 43 RSI. You know, I would imagine if it does go up, it will go up to about here. So the risk to reward wouldn't be 2 to 1. So me personally, I like Virgin Galactic the best here, if and only if it closes over 1746. It's a really volatile market, everybody. You know, the sentiment has changed. You know, I told you a week ago or so that, look, sentiment can change quickly, super fast, and it did, right? So I want to be patient. I want to wait and see if some things are going sideways a little bit, and that there's some buyers possibly coming in somewhere. So interesting, VIX has come down with the market coming down. I always like to look at VIX kind of vis-a-vis what the market's doing. And, you know, the VIX has sold off here a little bit. Let's check real quick. Let's look at the 1030 EMA crossover. Well, the 1030 EMA crossover is still in place on the VIX, which shows that we still have volatility. I mean, Friday we were up huge, came back down. Today we were up huge, came back down. Is positive, still 2.5% today, but well off of its highs. Let's see what Apple's doing. Apple is forming a double bottom with a bullish divergence. See how we have the low with the deep red MACD bars? We rallied into some green. Now we've come back, tested that low, no red to be found. So this could bounce at the end of the day. I'm not saying it's going to, and I believe it got very close to under the 30 RSI. Let's take a look. Yeah. Oh, and Frank's in this trade, but I'm all lost now where Frank bought this because of the split. And it looks like Frank bought, that's right. Frank bought back at 113, so he's slightly in the money. Yas bought it on Friday at 118.50, so underwater on that, unfortunately. I always trade Apple, so I always forget. Let's see. Yeah, I wouldn't be surprised if we bounced here. Don't know for sure, but it's possible. So I'm keying off Virgin Galactic on the weekly at 1746, at 1739. So if it stays under, I will not buy it. If it triggers again tomorrow, I will buy it. So we'll see what happens. Frank says, I just added to Apple here. Okay. Probably not a bad. Oh, I forgot. I did make a trade on Apple today. I forgot to share it with everybody. I did sell some premium. I sold some cash secured puts on Apple down here to $77.50, meaning that as long as Apple stays above $77.50 by November 20th, I will be able to keep all the premium. And volatility has kicked in, and of course volatility is one component of options prices. So now that volatility has kicked in, I got a lot more premium for that. That gives me about 31% protection to the downside. I do want to point out that that 77.50 mark does correlate nicely with the 250-day moving average, which is significant support. Over on the weekly, you can see I have the 50-week moving average above me as support, and over on the monthly, I have the top of the 1 ATR channel, the 20-day moving average, and the previous high, which should act as some support. So as long as Apple stays above $77.50 by November 20th, I will be able to keep all the premium. And it was pretty good premium. I have to say, it was pretty good premium on Apple. I haven't done a lot of put selling lately because there hasn't been any volatility, and you just don't get you just don't get a very good premium when there's not volatility. But now that volatility has come back in the market, and I think I would feel pretty good about getting assigned shares of Apple at $77.50. But we'll see. Glenn says Apple has a gap between 99.78 and 164 cents. 100 feels like a good entry. Yeah, good round number for sure. David says QQQ close to a 520 cross under. I believe the cross over back test well based upon the Word document for you. That is correct. That is correct. The 520 crossover on Apple is a really good one, and my students and I, we see it a lot. But yes, you're right, very close to crossing under. What do we have? 4 minutes left. Well, Apple did not bounce there. All right, I'm going to have to turn my attention towards SPCE. And my line in the sand here is 1746. And I am buying it as a weekly trade, meaning that I'm going to buy a lot fewer shares because it is weekly. But it's 1739. If it closes over 46, I will buy it. If not, I will sell it. Not sell it. I will not take the trade. I'm going to have to get out of DGX right now. And take the loss on that trade. Okay, so DGX is gone. And I'm just going to sit here and watch Virgin Galactic, see if we close above 1746. If we do, I will buy it. If not, I will not take any trade today other than the S&P 500. But yeah, you're right, David. And, you know, if we can get that 5 crossing back over the 20, it's a really good entry on the Qs. All right, so back over to Virgin Galactic, 1739. We have 2 minutes to go. We'll see what happens here at the end of the day. If there's any, and I'll do my best to get in it if it does hold, but no guarantees, because at the end of the day, you know, this can move quickly. 1741. Well, it looks like things are selling off at the end of the day. Wow, we're down 583 points. 1 minute to go. 460 points down on the NASDAQ. Wow. Man, how things change in one day. You couldn't get the NASDAQ to go down for anything over the last month. And now you can't get it to go up for anything. Yeah, I don't think Virgin Galactic's going to do it, but I'm watching it. Looks like Apple's hitting new lows. And I don't think Virgin Galactic's going to do it. So it looks like the only thing I'll be buying today is just my standard overnight SPY trade. So that's it. That's the day, down 635 points. Wow. NASDAQ down 474, S&P down 97. So listen, if you have any changes for me on the board, if you have any new entries or exit, this would be the time just to put them in the chat, and we'll spend as much time as we need to get those all straight and accurate. Before we do that, I just want to put in my quick little daily plug and remind everybody that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I love to teach. I have been trading for over 24 years. I have studied one-on-one with some of the great traders and educators out there, like our good friend Stephen Burns, Dr. Alexander Elder, Kerry Lavorne, Larry Williams. And like I said, I've studied one-on-one with these gentlemen, and the course that I teach, everything that I've learned from each one of these traders, I combine, and that's the course that I teach. I know that if you take the course, by the time you're done, you will have a much better understanding of the markets, how to enter trades, exit trades, position sizing, psychology, minimizing risk, all the things that we do here. So if you are interested in doing the course with me, please let me know. The course is 15 hours, 5 sessions. Each session is 3 hours. And so it's a good amount of time. And in my opinion, the very, very best way to learn something correctly is to learn from someone one-on-one, so that you can ask questions right away and get them answered right away. And I ask you a lot of questions too. All my students know I ask questions. I throw curveballs. I just really want to make sure they really understand the concept of that particular lesson before we move on to the next. So if you're interested, I like to have a free Skype call with a prospective student. It's free. There's no obligation. I won't ask you if you want to take the course. I promise you. I don't like when people do that to me. So basically, this is just a Skype call to get to know you better, learn a little bit about your trading history, your challenges, your goals, and then it's a good time for you to ask me questions about the course, and then I can answer them in detail. So send me an email. Email's in the description of this video. You can also send me a message on Twitter at Gossett Trading on Twitter. And if you do contact me, I'll write you back, say, hey, let's set up that free Skype call. No obligation Skype call. We'll talk, and then when we're done with the Skype call, I'll say, hey, it's nice meeting you. It was nice putting a name with the face. Think about it. If you're interested, email me back, and we'll set up the lesson. So. And then if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. Helps build the channel, helps keep the channel around, promote the channel. A lot of people out there need help with learning good trading principles. And I think if we could get people here and they came here on a regular basis, we would start to imbue them, invite them with, good trading approaches. And I think it really would help. So if you could hit the thumbs up button, I would really, really appreciate that. Okay, so let's take a look here, see where I bought what. So I bought SPY at 333.21. So it's the only trade that I took. I did get out of DGX with a loss. Then I took SPY here at, that's not SPY. Woo. Well, all I can say glass full is I'm glad I sold it at the open. Oops. Oh, I guess I do have to keep Apple around because as I mentioned, I did sell those puts on Apple down to $77.50. All right, so I sold the Apple puts. I bought SPY here at 333.21, and that's it. I'll tell you what, I felt like I dodged a big bullet today, only having that one position, which, again, that's why I like to take basically one position a day, because if I do get hammered the next day, it's only on one instead of multiple. And if it goes up the next day, then I have a little profit cushion on that one, and then I can look for the next best trade. And if they both go down the next day, well, then I'm only losing house money instead of personal capital. So that's it's a pretty good policy, and I learned that from Steve, and it really makes a lot of sense to me. Zach says, Greg, did Tesla reject the 50 on your chart for the daily, or is it resting right on it? Hard to tell on mine. Let's take a look. Well, Tesla, oh, the 50-day moving average. Well, the 50-day moving average is 329.63, and we're at 330.21. But how low did it get? It got as low as 329.88. No, it did not quite reject it yet, the way that I look at this sack. Johan bought DBX. Okay. All right. Perfect. Double bottom, bullish divergence, and you could not get any closer to that 200-day, giving yourself a really good risk to reward. Excellent, Johan. Excellent, excellent. Just remember that thing goes below, closes below 200 tomorrow. You know, if it were me, I'm not telling you what to do, but if that were me, that's where I would exit. Kamal says, I was supposed to get out of DGX, but missed the exit. We'll do it tomorrow. Okay. Yes is out of Apple. Yeah, shoot. I was hoping that would bounce for everyone. One profit target hit on Friday. Stop hit today. QQQ's the same. I think I already took you out of the queues if I remember correctly, yes. I don't think I have you on here. I must have done that accidentally. Okay, forgive me. Zach says, thank you, sir. You are certainly welcome, Zach. All right, any new changes for anyone else? So Kamal is out of, not out of DGX. He kept that, he missed it. Okay, and then Frank said, I just added Apple here. Do you have an average price, Frank, for me? I can get that all squared away. So Apple's down after hours. Qs are down after hours. SPY, I would imagine. No, up 10 cents. All right. Wow, what a few days we have had. You know, not to rub this in, everybody, right? Because this is not a I told you so. It's just a good teaching moment. But, you know, in hindsight now, this seemed just ridiculously strong move to the upside, right? And, you know, as I've mentioned many times before, when you start getting over the 70 RSI, you start getting up near the 6 ATR channel, no volatility whatsoever. You know, the old saying is the market goes up by the stairs and comes down by the elevator. You know, that's why when we start getting up in the high movements up here, I like to get out. I like to get out while the getting is good. And I'm very aware that it's most likely going to just continue up even after I sell it. But, you know, if you look back in time, I may miss 2 or 3 days more upside, but I avoid this kind of stuff, right? I mean, this took out like a month and a half worth of movement in just 3 days. So sometimes it's a little better to get out while the getting is good instead of having to get out on weakness when everyone else is selling. So I hope that point makes sense. And I'm grateful for the day trades today. You know, they definitely helped mitigate the loss a bit. Yeah, surprised Apple did not bounce. That was a pretty good signal. Tell you what, if I was not trading, I don't think we went above 30 over 30. Oh yeah, we did. We went under 30 over 30, but it was the last bar of the day. But look at this double bottom with the bullish divergence. Here you have a low. Here you rally into green. We have a lower low. Trigger would have been an under 30 over 30. But this is more of a day trading trigger. I wouldn't buy this to hold overnight, but basically this, the double bottom with the bullish divergence means we had a very strong move down as indicated by the momentum of the MACD. Then we had a rally, we went green, and this second leg down, even though we went lower than this previous low over here from a MACD math standpoint, this move down from a MACD math standpoint was not very strong, with the implication being that if you're running out of momentum, it's possible, there's a good possibility that you'll rally. Dr. Alexander Elder, he considers double bottoms with bullish divergences or double tops with bearish divergences. He considers it the strongest technical indicator out there. Whether it is or not, I'm not sure, but we have to find approaches that fit our personality, and that fits his personality. But of course, Dr. Alexander Elder is very famous author. I think he probably wrote the best-selling trading book ever, which is Trading for a Living. But as I mentioned a bunch of times, I have studied with him one-on-one, and I picked his brain clean. I'll tell you what, that poor guy, that poor guy, I think he was exhausted when he was done with me. But look, cost a lot of money, and I wanted to really understand. So anyway, but this is something that he would buy. But he would buy this intraday, but he wouldn't buy this and then hold it overnight. Okay, so Frank said, stopped out of remaining shares of J&J, no loss. Okay, perfect. That was like my, what was my trade that I had? Disney, where I took half profit, and then when it got back to my entry, I got out. And that's just good trade management there by Frank. There's nothing worse than have a nice profitable trade and have it go negative. That's why when it moves a certain amount above my entry, when it moves 1.5 ATRs from my entry, that's when I say, okay, we're at a certain level. If it goes back down, gets to my entry, I'm just going to call it a scratch trade or a break-even trade. Okay, got you out of there, Frank. Brian says, great point, Greg. Goes up the stairs, goes down the elevator. That's how it works. There's more fear. Fear is a stronger emotion than greed, and that's why the markets sell off faster and stronger than how they go up, because people get more emotional when they see things going down than when they go up, and that's why you go down by the elevator and up by the stairs. It usually goes 2 or 3 times faster to the downside than it goes up. Frank says, average Apple about 113. All right, well, I hope that goes up for you, buddy. Let's get this all straightened out here. Okay, so just almost break even. Oh, come on, Greg. What's going on here? But there are a lot of signals on Apple during this last hour. I'm glad I was teaching and not taking them. Okay, we'll put Frank there. Yeah, okay, we got Frank. And again, congratulations, Frank, on picking the winner of the Kentucky Derby. Frank's got a knack for picking winners, whether they're stocks or horses. Dan says, Greg, for the SPY 200-day moving average crossover strategy for use on work 401k must place unchangeable orders by noon that is filled at close. So any suggestions on handling this? Okay, for use on work 401k must place unchangeable order by noon that has filled at the close. Okay, well, first of all, just so we get the terminology correct, the S&P 500-day moving average crossover. There is no, we're not talking about a crossover on the SPY. Crossover is when you have a faster moving average crossing over the slower moving average. When we're talking about the S&P 500 here, we're talking about a close, just strictly a close under the 200 and close back over the 200. So for use on work 401k, must place unchangeable order by noon that is filled at the close. Okay, so basically, and for this approach, we're a long ways away, Dan, right? I mean, we're way above the 200. We would actually have to go under the 200, close under the 200 and close back over the 200 to have a valid mechanical trade, or also a rejection of the 200 intraday and then close back over. If it were me, I'm not trying to give you advice. I'm just, trying to tell you if it were me, how I would do it. If I saw a clear rejection of the 200-day moving average and you were nicely back up above the 200-day moving average, and I know you have to do it sooner than you can't wait until the actual close, I would just want to make sure that you felt very confident that it rejected the 200 and was going to close nicely over it, because you're kind of having to front run and assuming that it won't close under the 200. But that's what I would do. If we had a rejection of the 200 and close back over the 200 and look fairly certain that the rest of the day it was going to hold over the 200, then I'd place the order for the close. And if it closed under the 200 and then closed back over the 200, same situation applies. I would just want to make sure that it really was look fairly certain that it was well above the 200 and was going to close. Tomorrow, Dan, I'll talk about the end of the month SPY trade, which is a fantastic trade. I learned this from Stephen Burns' book, 5 Moving Averages That Beat Buy and Hold. It's an unbelievable strategy for people that don't have a lot of time to look at their screens every day. This particular strategy, you only need to look at your charts one day a month on the final trading day of the month, and the results of this back test just absolutely demolish the return of just buy and hold SPY, and reduces the drawdown by, like, if I remember, 70%, 75%, maybe even 80%. If I was just managing a 401k and I didn't have time to look at the screens, that's the one I would use. I'll talk a little bit about that tomorrow, though. But regardless, we are a long ways away from that 200-day moving average or 250 days, so it's actually not even relevant at the moment. But I hope that makes sense, Dan, that it's not a moving average crossover. There are moving average crossovers like a 50-200 crossover, but that's well above as well. But I think you're referring to the under 200, over 200. I hope that helps, Dan. Glenn says AMD... Yeah, well, we're below the -1 ATR channel, so we've lost the value zone. So whenever we lose the value zone, what I'm looking for now is a pullback into the value zone, and then a little bit of a dip and a higher low V1, V2. That's what I would be looking for. Let's look at the weekly. Weekly's holding the second ATR channel, still above the 10-day. Yeah, there could be some potentials there. I like this right here, though, Glenn. I like the confluence of the 50-day moving average and the third ATR channel. And let's take a look and see what the RSI level would be at that point, 38.77. So not a triple crown confluence. Triple crown would be the third, negative third, the 50, and the RS 30, under 30, over 30 RSI, but still. The 50 negative third ATR channel would be a decent spot. And again, everybody, the price always comes back to the value zone. The value zone is the green here and this green here. This is a value zone. This is a mean reversion back to the mean. The best time to buy is in the value zone, sell above value, or buy below the value zone, sell at value. But chasing these things up here, sure, the last August, it worked. There, no doubt about that. But the majority of the time, it does not. So if you can try to be patient, wait for things to come back in the value zone, you're going to do much better in the long run if you can do that. Dan says the problem could be price moves back across 200 before the day canceling signal. That's right. That's why I was saying that you need to be fairly certain that it's going to close above. Glenn said SE at 130 is another tag of the 50 SMA for a good entry. All right, let's look at SE. Well, I mean, when I first look at this, so you said 130. Yeah, so 130 lines up. Yep, lines up with the 50. And a lot of time these big moving stocks, they will pull back to the 50-day moving average. They really, really will. I mean, look how long this has been since above the 50. So in my opinion, the first kind of major pullback that the financial institutions look at is like a pullback. So look, we may have another day or two down, but I think it is going to offer some pretty good setups for people that have been patient to wait for this. Frank says, thank you, Greg. Not a big better, but I enjoy the challenge of handicapping. That's great. That is great. I remember I would spend every summer in California with my aunt and my uncle. And my uncle was, he liked the horse races. He'd, dress up and the whole thing. And he'd make me dress up and he'd drag me to the horse races with me. Maybe that's why I got into trading, was my exposure to horse racing. So what else are you good at, Frank? Oh, well, I know. You're good at riding, you're good at horse picking, and good at trading. So the trifecta. Dan says, thank you. I get it now. I just read it. It's great. Okay, good. Oh, yes, the book, right? Nathan says, what just made the SPY pop? Did the SPY pop? A little bit, 38 cents. I don't know. I've been speaking. I haven't been able to follow the news. Jeff Young, if you're still out there listening, man, thanks for dropping by today. What a great, Jeff and I started that chewing gum company from nothing, everybody. Literally nothing. I could not have done it without Jeff's help. Jeff's one of the smartest guys out there. And, that little chewing gum company that Jeff and I started, Buzz Gum being the first one, that turned into a big company. So many thanks to Jeff. We would battle sometimes, but I think we were a good kind of yin and yang for each other. But really great, Jeff. And I'd love to catch up with you and see what's going on. So we have each other's numbers. So, if you get a few minutes to chat, please call me. I'd love to catch up with you, bud. It's always nice when I have old friends come on here, and it's a nice surprise. Jeff said, nice being here. We should catch up. Oh, good. You are still there. Great, Jeff. Yeah, I look forward to that, bud. See what's going on with the family and work and everything. Nish. Hi, Jeff. I don't know who Nish is, but maybe he knows Jeff. Thanks for coming, Nish. Appreciate that. So, listen, if you have any other questions, if I can help with anything, clarification, please let me know. I'm happy to do that. Frank says, and I have a song coming out that I wrote and recorded recently with my brother called Hey, Say Hey, USA. Oh, man. Well, once that's recorded, Frank, please let us know and give me a link or something and we'll check it out. Fantastic. Fantastic. Wow, what a day. What a day. I mean, talk about market turning on a dime. I have never seen more of a dime than that. Anybody seen more of a dime than that? But there will be buyers. I assume there will be buyers coming in. We didn't quite get any, but we got a few buyers in the value zone Friday, but the level wasn't correct for them. I would assume that this 50-day, 30-day moving average, 50-day negative third ATR channel down here about 329. I would imagine some more buyers would step in here. Doesn't mean it's going to hold, right? But let's take a look at the weekly. It's always good to look at things in a couple time frames. It could hold here at the 10-week moving average 331. It may hold support here at the 1 ATR channel. Probably a good rule of thumb is the previous high, which acted as resistance, will now act as support. So this high over here, there's a confluence right there, 322. You have the 20-week moving average and you have the support of the previous high. So on the weekly, 322 that does look like a buy area right there. Glenn says work dropped 15% after earnings. Oh boy. I cannot remember that symbol. I don't know why. Oh, work, just like it's spelled. Okay. Oh boy. Now down 16%. So did work have, I guess work had earnings. Again, teachable moment, everybody. In the last month, we've seen a lot of things gap on earnings. It doesn't always work that way. And one of the best ways to preserve your money is not to gamble through earnings. And the people that decided to hold this through earnings have now lost 16% of their money. It's really just gambling. If you want to gamble, go to Las Vegas, get a free buffet and some show tickets in a hotel room. The market doesn't give you anything for gambling. And remember, our main focus in trading is risk management first, profit second. If you look after your risk, the profits will take care of themselves. But generally holding through earnings is a bit of a gamble. Sometimes it works out. And if you do it a couple times in a row and it works out, you're like, hey man, this is easy money. But we're all smarter than that. Trading is not that easy. There's going to be times where it drops 15 or 16% like it is right now. Yes, please share that with us, Frank. That'd be great. Well, I'm glad that the electricity made it all the way through. Like I said, I was going to go over to where I used to work at the old chewing gum company building, Kimber Cable, and I wasn't sure where I was going to set up. Maybe they were going to put me in the back of the warehouse. That'd be kind of fun, right? But anyway, I was kind of looking forward to seeing all those people that I used to work with. I haven't seen them for a while, but luckily the electricity went back on. Hey, I was going to tell you, now that I can talk about it a little bit, when my dog passed away the other day, I was waiting for the vet to show up. It was nighttime and she was out, because of the drugs. She was sedated and I was just kneeling down, talking to her, rubbing her, just having a heartfelt conversation with her. And I heard this noise behind me. About 3 feet away was a fence, and there was a full-grown buck deer with big antlers and everything poking its head through the fence, wanting to know what was going on. Isn't that amazing? I mean, I have deer up here. They don't want to have anything to do with me or even come close. And this buck actually came like 3 feet away from me, poking its head through the gate to see what I was doing with Katie and why we were having this moment. I think if the gate was open, it would have come in. So anyway, I kind of looked at that as a good omen and a good sign. But anyway, I wanted to share that with you. All right. Well, listen, I think that's it. Please, two requests of everybody today. Please go out, try to do something nice for somebody today. Just a smile, a wave, hello, just a nice gesture, hold the door open for them. Just help them out. If we could just, every day, if we could just do one nice thing for everybody, if we could do one nice thing for another human being and everybody did that every day, world would be a whole lot better place. And we need it right now more than ever. And in addition to that, if you could also go out and do one little nice thing, one little act of kindness for an animal, that would be doubly as good. And in my scientific research, doing a nice thing for a human and an animal each day will improve your trading results. And I base that on completely nothing, but I like to think it's true. So if you could remember that, that would be great. And then also, if you could hit the thumbs up button before you get out of here, if you enjoyed today's podcast, I would appreciate that. So, All right, well, that's it. Last chance for any other questions. If not, maybe I'll go for a hike. It's blustery out there, and I'm tired from not sleeping last night and the early wake up. By the way, I woke up this morning and my first thought was, oh my gosh, the electricity's off. How am I going to get coffee? Because I have a Keurig. So, like a champion, I got in the car basically in my pajamas, drove down. I had to drive to a store to find some coffee. And I had to drive quite a long ways away to get the coffee, but I got it, so I was okay. All right, everybody. Well, I think that's it. Thanks for coming today. I appreciate it. I hope this channel is helping you, and I hope to see everybody tomorrow. Have a good rest of your day. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.